Good afternoon. It looks like many of you are starting to jump on. I'm going to wait just a minute to give all of our attendees a moment to get logged in. All right, I'm going to go ahead and get us started. Good afternoon. My name is Katie Leffel, and I'm the director of the Oklahoma School Foundations Network. And I'm excited to have you with me today for the second in our series of Fall Forum Wednesday webinars. Last week, we had the opportunity to talk with FlipCause, a company that does data management, website building, and other sort of credit card processing and resources for school foundations. If you missed that webinar and would like to view it, it's posted now on our Oklahoma School Foundations Network website, so you can go over and check it out. And today I'm really excited to get the opportunity to share with you about the Opportunity Tax Credit Law. This is a new law that's going into effect November 1st from a bill that was passed out of the Senate in the past Oklahoma legislative session in the spring of 2021. And today what we're going to do is start with an overview of the law, give a little bit of a history of tax credits and for schools and how they got started and how we've gotten to the place we are now with this newest update to the Opportunity Tax Credit Law. And then we're going to take some time to sort of break down tax credits in general and sort of go back to basics and talk a little bit about what tax credits are, how they differ from tax deductions, exactly what this law will allow school foundations to do for their donors. And then towards the end, I'm going to promote all of you attendees to panelists during our Q&A session so that we can be face-to-face to ask questions and to share with one another. So thanks for being with us. Before I jump right into talking about the tax credit law, I want to take just a moment to share with you a few things about our Oklahoma School Foundations Network. We are a free resource that is a program of the Oklahoma Foundation for Excellence. We provide free services to school foundations across the state, and listed here are just a few of the different things that we can do to help your school foundation out. I provide on-call consulting and can answer questions, do research to help school foundations, and I'm available at the contact information listed there on the side. You can feel free to call my cell phone if you'd like to speak with me. I do free strategic planning services and board retreat facilitation. If there's something that you would like your board to do some training on, I would love to work with you to custom design something that would be of use to you. Obviously, we do webinars and other training opportunities in person from time to time. Every year, our Oklahoma School Foundations Network gives outstanding program awards for school foundation programs that demonstrate excellence, and that comes with a $1,000 prize. And if you missed it, we announced our 2021 winners this past Monday, and they are the Jinx Public Schools Foundation for their Trojans Read the Way bookmobile, the Grove Education Foundation for Excellence for their Get Books, Not Twix book vending machine, and the Putnam City Schools Foundation for their CAST program, Communities and Schools Together. If you'd like to learn more about those programs, because they're excellent programs that would be great resources for replication in districts across the state, there's more information available on our website. And on October 27th, our final webinar of this series, we'll be interviewing the leaders from those foundations to talk about those programs. And so it's definitely not too late to register to attend that webinar. Our OSFN network also provides sample documents and other resources as needed. We have a monthly newsletter that keeps you up to date on happenings and things that we can offer. We do networking opportunities from time to time. And then finally, we can provide you with a half-price membership to the National School Foundation Association, which just this week is relaunching as a new entity, and henceforth will be referred to as the National Association of Education Foundations. More information is coming about that soon, but I just wanted to put that on your radar. Two other things that I'd love for you to know about that would be great for you to share with your district from our larger Oklahoma Foundation for Excellence are our academic Allstate Scholarship Awards and our Medal for Excellence recognition for teachers. The nomination process for both of those awards is open right now, with Allstate nominations due by Thursday, December 2nd, and Medal for Excellence nominations for teachers due by Tuesday, November 30th. So it's definitely not too late to nominate an outstanding teacher in your district to be recognized, and for your outstanding seniors to apply to be All-Staters. Another new and exciting program that we're getting ready to launch is from our Boren Mentoring Initiative. The Boren Mentoring Initiative was created many years ago to support mentoring for K-12 students across the state of Oklahoma. And we're going to be kicking off a new program to give grants to mentoring organizations, both startup grants to new organizations and opportunity grants for existing K-12 mentoring organizations. So I wanted to take just a minute. Information about this is just being released this week and is available on our website, with the portal to apply for these grants opening up November 1st. So more information will definitely be coming soon, but if you have some mentoring organizations that operate in your school districts that might benefit from having some more funds to spend on students, I'd love for you to pass the information about this program along to them. With that, I'd like to launch into a little bit of background about the Oklahoma Equal Opportunity Scholarship Act. There's a lot of text on the screen. It's mainly for my reminders. I will share these slides with you after the presentation. And the recording of this webinar will also go up on our website sometime tomorrow. So don't worry too much about trying to get all of this down. To begin, this law was basically started as an outgrowth of the school choice and voucher movement. We have a cadre of people in Oklahoma, as many states do, who are looking to open up opportunities for school choice. And in this particular instance, this group of Oklahomans was looking to provide scholarships for students to attend private schools. And traditionally, vouchers and use of state tax money to support private schools is not very popular. And so this act started as sort of a creative way to give donors a break on their taxes in order to provide more money for scholarships for students who would like to attend private school. It began in 2011, and basically what it set up was the ability to make donations to SGOs, which are scholarship granting organizations that register with the Oklahoma Tax Commission. And donors could give a donation towards a scholarship to these SGOs and in return receive a tax credit, which we'll talk about exactly what that means just a little bit later. Also, as a part of that, because we have many rural communities that do not have private schools in their districts, in their areas, the original Oklahoma Equal Opportunity Education Scholarship Act also allowed public schools that had no school within a 10-mile radius or fewer than 4,500 students in their district could also apply through an educational improvement granting organization to receive donations and grant tax credits to donors to help support innovative educational programs. So this law has actually been in place for quite a while now. And what we've seen is there has been tremendous growth in the interest on giving money to private schools through the scholarship granting organizations. We have not seen the same growth on the public side with the EIGOs, simply because as of right now, there are only 1 or 2 EIGOs even registered in the state of Oklahoma. So the changes coming to the law this year are going to open up that public side a lot wider, and we'll talk about that in just a minute. The original 2011 law capped the overall tax credits available to donors at $3.5 million for the private school donations and $1.5 million for the public school donations. But if one side didn't use all of their credits for a year, there was a pour over provision, which meant the public side didn't use all 1.5 million. That money could be made available at the end of the year to private school donors if they went over their cap, and vice versa. But the way that that actually played out is that every year for the past several years, the private school side is far exceeding the cap. The public school side is coming nowhere close. So the private school side of this tax credit law is actually using up to $5 million a year now, and also exceeding that cap. And so those donors had started a push several years ago to raise the cap. So there was a whole push from those SGOs on the private side towards legislators to raise the cap to make more of these tax credits available because they've been incredibly popular. So starting in 2019 and in 2020, we saw different bills introduced on both the House side and the Senate side with provisions made to add more money and availability for tax credits for these donors. As you might imagine, a lot of public school advocates are not very happy about this expansion of this law, not happy about it in the first place, and certainly not happy about expanding it. Because although it doesn't give our tax dollars directly to private schools, it does deeply discount private school donations with tax credits, which takes that tax funding out of our general fund and makes it no longer available for education and lots of other state priorities. So as the push came to raise the cap, the school choice side, the scholarship granting organization side wanted a much higher cap and tax credits made available. And the proposed law for this year raises the overall tax credits for both public and private from $5 million to $50 million per year. So that's a huge increase. And in return, the public school advocates were pushing hard. Well, first of all, a lot of them not to expand the cap at all, but to gather more data. They definitely want more transparency on the scholarships that are granted. One of the things that's been a little bit controversial about this law is the fact that there has not been a lot of reporting required on the scholarship granting organization side as to who exactly is qualifying for and receiving these scholarships. So, for example, we don't know the exact income levels of a lot of the families that are receiving these credits. And speculation has been made that they aren't really going to what we would consider to be truly needy families, that it's really sort of a break that's just helping families who already could probably afford for their kids to go to private school. So the expansion of this law, the changes this year are going to require some more reporting for the private school side. Public school advocates also wanted access for all public school districts to participate, not just rural schools that are not within the 10-mile radius, and not just small schools that are under 4,500 students. They wanted equity in that piece, that all school districts could have an opportunity to participate in giving tax credits. And then an equal cap for private and public school donations. You might remember from that last slide that the original law gave $3.5 million to the private school side and only $1.5 to the public school side for scholarship granting organizations versus the EIGOs. So they wanted some equality there. So those of you that followed along as we kind of gave some legislative updates last year may remember that there were several bills in play last year regarding expanding the tax credits for this upcoming year. And Senate Bill 1080 was ultimately successfully passed and has been put to the governor's desk, signed, and will become law on November 1st of this year. Having said that, donations to be granted these tax credits are only going to be eligible when they're made after the first of this next coming year. So we have a little bit of time here, first of all, before the bill completely goes into law, and second of all, before you can start granting tax credits to your donors to figure out exactly what all of this means. The law does raise those caps on tax credits to $25 million a year for private schools, $25 million a year for public schools, with that pour over effect in place. It does allow all public school districts to participate in granting these tax credits to donors. and qualified foundations. And we'll talk a little bit about what that means in just a little bit. It's going to require a lot more reporting on the private side, which a lot of public school advocates are hoping is going to be eye-opening for our legislature on exactly who is getting the benefit of those very valuable tax credits. A couple things we need to keep in mind. This law is going to require each public school foundation to be approved by their local Board of Education before they can accept qualifying donations. And we'll talk a little bit later about that process and how you might approach that with your school district. The law also requires that districts and foundations use 90% of donated funds for innovative educational programs, with 10% allowed for overhead expenses. So just something to note. Requires districts or foundations to submit audited financial statements along with information on the benefits, successes, and failures of their programs to the Tax Commission, the Governor, the President Pro Temp of the Senate, and the Speaker of the House by December of 2022, and then once every 4 years. This is going to be a barrier for a lot of our school foundations. A lot of our small school foundations do not currently do annual audits. And so this might make it difficult for some of those school foundations to participate in this program unless they're ready to step up and start paying for audits to happen annually. The law also requires all organizations to submit an application confirming their nonprofit status. It'll also ask you to confirm that you've been approved by your school board, I'm sure. The Tax Commission has not released the steps of this process yet. I've been in touch with the Oklahoma State School Board Association and their attorneys, and I've also tried several times to make direct contact with the Oklahoma Tax Commission to ask sort of where we stand on this process. And all I've gotten back right now is that it's still underway and they don't have anything finalized quite yet to share with us. I have attached here a tax commission form from 2017 that was for educational improvement granting organizations, those EIGOs, that might provide us a little bit of a window into what that process might look like. It's a pretty simple 2-page form that I can show you a little bit later. And so I would anticipate having something similar to that required for registration for school foundations once they make that process available. To me, the best information on this bill, if you want to go through it piece by piece and really see a good breakdown, this Department of Education breakdown of the law, I'm going to show you real quickly, is the best thing that I've seen as far as helping really translate exactly what this bill says into a language that is understandable to those of us that are not attorneys. So I'm going to make this available to you if you haven't seen it as well. It basically goes through and breaks down section by section, the law, what each section says, what it requires, and makes that legalese just a lot easier to understand. So I'll make sure that you have access to that going forward. Now let's talk just a little bit, before we get back to those specifics of the bill, I want to take just a minute to share with you sort of some real background information on exactly what the tax credits versus donations are, how all of this works, and just sort of some basic background information. I want to start by reminding you all that my background is in education, and I am a public school advocate and a fierce one, but I am self-taught when it comes to tax law. I am certainly not an accountant. I'm certainly not a tax expert. So I want to just say that really clearly before I launch into my explanations here. But I have spent a lot of time trying to learn about tax credits and how they work. And so I just want to share some background information that I found helpful as I was researching this bill over the last couple of years, and that hopefully you might find helpful as well as you're starting to navigate this. And thanks to Blair, she likes my disclaimer. Yes, I want to be very clear that I am not an expert. To begin with, most of us are familiar with tax deductions on some level, because hopefully all of us are paying taxes, and as grown-ups have been doing so for quite a while. And if you're familiar with tax deductions, both as a person who's involved with running a nonprofit and just as a person who pays their taxes, you understand that tax deductions basically give a benefit to people who donate their money to nonprofits. And the way that that mostly works is you give a donation to a qualified organization, and you're allowed to deduct a certain amount off of the income that you will be taxed on for that year. So the example that they're giving here is that tax deductions reduce the overall income that you're going to be taxed on. So for example, if you get a $1,000 tax deduction and you're in the 25% tax bracket, that's going to save you about $250 in your taxes. Tax credits, on the other hand, are much more valuable because they reduce dollar for dollar the amount of taxes that you owe. So instead of taking your income and reducing the amount of income that you pay taxes on, they actually start with your tax bill and directly deduct the amount you need to pay in taxes. So $1,000 tax credit in any tax bracket is going to save you $1,000 on your taxes. So you can see that if you're someone who, unlike me, is independently wealthy or has a business that is very successful and you have a big tax bill, a tax credit can be a really valuable way for you to really reduce your tax liability for any given year. And this is why these credits become very valuable for our organizations to use when trying to attract donations. So that's sort of a basic breakdown of how tax credits are different than tax deductions. The bill that we're talking about, the law that's about to go into effect, allows donors to get tax credits on two different levels. If you give a one-year gift to a qualified organization, you can get up to a 50% credit on your donation as a tax credit. If you commit to a 2 consecutive year gift, you can get up to 75% credit on that gift. And let's look at this next slide for sort of a breakdown of what that looks like. Oh, one after this. There are also limits for tax credits based on your filing status. So if you are an individual and you file as an individual for your Oklahoma state taxes this coming year, your tax credit max that you can get is $1,000. If you file jointly with a spouse, you have a $2,000 limit. If you are a couple filing jointly, you can get up to a $2,000 credit based on your donation through this law. If you're a qualified business entity, you can get up to $100,000 in tax credits based on your donation through this bill, through this law. So as you can see, this could be something that could be incredibly valuable and incredibly interesting to businesses that have a high tax liability and are looking for ways to cut that liability. This is a piece of collateral that I found on the Oklahoma Archdiocese website that really breaks down for a donor what they would need to give and what they get in return for both a 2-year commitment and a 1-year commitment. So here are examples for a couple filing jointly, an individual filing, and a qualified business entity with both the 2-year gift commitment and a 1-year gift commitment. And so the way that they work these numbers is so that they can give you the max tax credit here. So that's why they get into this. Why would you have the pledge example be $5,334? Well, because they're trying to get you to the $2,000 maximum tax credit for that 2-year gift. So this kind of shows you how you could communicate to your donors. If you want to receive the maximum tax credit available to you under the law, you would give a $5,334 pledge as a couple filing jointly. That means each year they would write a check to your school foundation for $2,667. And in return, they would get each year a $2,000 tax credit for that gift. Something else to note for this, that extra $667, while it's not available for tax credit, that money is actually still able to be claimed as a deduction on that same couple's taxes. So you kind of get to double dip on this. If you give above a certain amount that's not credited, it does become a deduction. For a 1-year gift, they would give a $4,000 donation to get that 50% tax credit to reach their $2,000 max. So I'm hoping that this is making sense, kind of seeing this laid out for you all. Certainly, as you're thinking about how you might approach donors, that 2-year gift commitment gives both them and you, I think, the biggest bang for your buck. You know, you can count on a 2-year donation at a specific amount from that donor. And in return, they know that they can get up to that $2,000 credit if they're a couple filing jointly. And then the other samples that are here are going to show you what it means to file as an individual to get that top credit at both a 2-year and a 1-year gift. And then as a business entity, the pledge you would need to make, the amount you're going to give each year, and the tax credit that you're going to get in return. So this program has huge advantages. Again, especially for qualified business entities that are looking to greatly reduce their tax burden, because it's going to give them that up to $100,000 a year off of what they owe in taxes if they make these donations. One of the scholarship granting organizations has put together a pretty nifty tax benefit calculator on their website so that donors can input their specific tax information in order to figure out their donation. And so I've linked that here, and that's something that you might take a look at just sort of as you have time, and that maybe I can show a little bit more of later in this presentation. So let's talk another minute about those credit caps and pour-overs, because I've just shown you the best case scenario for donors. If they give what they are supposed to give, then they should get up to their certain amount of their tax credits. In the past, where the wheels have come off this scenario is because of the overall caps put on available tax credits by the legislature. So if you remember back to the beginning of the presentation, that original law passed in 2011 had a $3.5 million cap for the private school donors and a $1.5 million cap for the public school, with them combined cap of $5 million available. And as I mentioned, for the past several years, those donations have greatly exceeded the available cap. And what that has meant is that donors then have been prorated and not gotten their full amount each year. We'll talk a little bit more about that in just a second. So with our new law going in place, there's going to be a $25 million a year cap on the private school donation side, a $25 million per year cap on the public EIGO donation side. So a combined cap of $50 million. Now, there is a big caveat in there for us on the public school side. The legislature also set a cap per school district in Oklahoma, and that includes both the district itself and any accompanying school foundation that's approved to make these donations. And that cap per district is at $200,000 per year. And unfortunately, that's across the board, regardless of the size of the foundation that you're talking about. So if you're a small rural district or a huge urban district, your cap for this coming year is going to be $200,000 no matter what. So the pour-overs, again, are back in effect. If the scholarship granting organizations are able to give away their full $25 million and the public side doesn't use their full $25 million, those will pour over and be available to the private side up to that combined cap of $50 million a year is reached. What I do not know yet is that if there will be a pour over within the public side before that money goes to the private side. For example, if the Foundation for Oklahoma City Public Schools is incredibly successful in raising funds through this program and hits their $200,000 cap and goes over by a long shot, and those donations have to be prorated, but a lot of small school foundations or smaller districts don't take any donations and there's still a lot of money left on the public side, will that money go to cover the over the limit public districts before it goes to the private side? We're not sure. That's one of only many questions that I have written down on the list to talk with the Tax Commission about as this process gets underway. So speaking of prorating, this is a really tricky thing that I know a lot of us are concerned about, how you can communicate effectively with donors. So I want to talk just a minute about this. You've got these caps in place. Let's say, again, I am a foundation and I have been qualified by my school district to give tax credits, and I've registered with the Tax Commission, and it's January 1. And I have 2 businesses in my district that approach me and want to do that full 2-year commitment. They're going to give me the full amount of money and get $100,000 in tax credits each. I've now hit my cap with just those 2 donors as a district. And so anyone else who comes and wants to take advantage of this program, and including those donors, are putting me over the cap. So what that means is all the donors are going to be prorated and not get the full credit for that year. So this is really tricky to communicate with your donors, because you're telling them that this tax credit's available, but it may not be available in the full amount to them that year. So here's some sample donor language that one of the private school scholarship granting organizations used on their website for this past year. So this uses the old $5 million cap language, but it should be a good example for us to look at. So this is what they said. For the calendar year 2019, the Oklahoma Legislature allocated $5 million in total in tax credits. If the total gifts to the Oklahoma scholarship granting organizations result in tax credits exceeding that $5 million, the actual tax credit percentage will be prorated proportionally, with the unused and suspended credits available to the donor in the next immediate tax year and up to 3 years after. So what that means is, if your donors don't get their full 100% tax credit for that year because it's been prorated, it is still available to them in subsequent years to be used. So I thought this was a really good language that they had on their website, a really great way to communicate that information. And definitely we need to think about how we're messaging that, because the last thing you want is to dangle a tax credit, have everybody think they're going to get their full $1,000 as an individual, or $2,000 as a couple, or $100,000 as a business, and then turn around and figure out that it's been prorated and they're not getting that full amount. So being upfront about that possibility of being prorated from the beginning is going to be really important. So now we kind of veer off into the land of a lot of questions, and exactly how does this work for school foundations? How do we get to a place where we're ready to take advantage of this? Because as we all know, November 1st is right around the corner when this bill becomes law. And January 1st, when donations become available for credits, is right around the corner as well. And although we don't really have a lot of the information we need to move forward as foundations and to feel confident in knowing exactly how to message this to our donors, there are some things that we can do while we're waiting to get that information. First of all, I would really encourage you to meet with your district leadership, discuss this program with them, make them aware of it, and discuss with them too, who is going to be the primary recipient of these tax credited donations in your district. Obviously, our foundations are set up to be the primary fundraising arms in most of our districts, and we like things that way. We want to keep that relationship going the way that it is. But you need to be talking with your school district and making sure that you're on the same page about who is going to be the tax credit granting entity in your district and how that will work. If you've spoken with your district and you're on the same page and they say, yes, we want your foundation to be the one to take these donations, then you can go ahead now before the first of the year and get that board approval in place, so that when the tax commission opens their registration process, you are ready to go and you already have your board's approval. Mary Malone, who's the president and CEO of the Foundation for Oklahoma City Public Schools, was kind enough to share some language that she used with her board in a recent board meeting, as she sought permission basically to be the processor of these donations in their district. So this was basically just the board language that was on their agenda. So discussion and action to approve Foundation for Oklahoma City Public Schools to accept qualifying donations pursuant to the Scholarship Act, and then its effective date. So this is certainly language that you could copy, that you could use with your board, that you could ask to have appear on an upcoming board meeting agenda if you are in a place where you're ready to take the step of being approved to process these donations. And I just wanted to share that language, and thanks to Mary for sharing it with us. As soon as the registration process is ready with the Oklahoma Tax Commission, You can be sure that you'll be hearing from me with more information about exactly what's involved in that process and how to go about registering your foundation to be a tax credit granting organization. Some other things you can think about in the meantime, though: programs to fund. Because this program is supposed to support educational improvement grants, you need to take a look at your current programming and figure out, is there something that you're doing already that you want to use these funds to support? Is there a new project that you're wanting to pursue that you want these funds to support? Because you're going to have to at some point report to the tax commission, the governor, the Senate pro tem, and the Speaker of the House, you are going to want to have in mind exactly what you're doing with these funds from the outset. And on the accounting end too, to be able to show funds in, funds spent, and that you're spending that 90% of those tax credited donations on the grant programs, with that 10% allowed for some administrative overhead. Creating a donor strategy, print materials, and information forms. We're a little bit early on this, but there certainly is a lot out there that you can look at to start getting your mind around how you might communicate about this opportunity, the language you might use, and some of the collateral you might want to create. And then the other thing that you can do on the organizational side is start determining how you're going to communicate and keep this donor information in a way that is very specific and maybe even separate from your normal donor information. The big thing that has to happen here, that is not a normal thing for donations coming into our school foundations, is that you are going to have to provide donor Social Security numbers to the tax commission when you communicate your list of donors and who is going to be getting these tax credits. That is the only way the tax commission can match your donor with their tax return, and so it is going to be required. Obviously, that's not a normal thing that donors are used to giving to school foundations when they're making donations. And so start thinking now about how you're going to communicate about that. You might start thinking about how you're going to record and keep that information safe. You might take a look to see, do you have a document retention policy in place? What does it say about keeping information and keeping information secure? Because obviously being tasked with keeping track of people's Social Security numbers, we have to be aware of security, safety, data breaches, things like that within our own organizations. Because, obviously holding that donor safety in the highest regard, we would never want to compromise that very sensitive information. The other thing that you'll want to be able to do is think about how you're going to communicate about prorated tax credits, and the fact that in some of your foundations, that is a very real thing that is likely going to happen. Maybe not in a lot of smaller foundations who don't reach $200,000 a year in donations. But it's going to be important either way to make sure that you covered yourself by communicating that clearly with your donors ahead of time. So as we come down the wire, I have linked some different donor collateral that private schools are using here on this page of the slide deck that I'll share with you. There are some really great resources here. As you saw earlier, I straight up stole the chart that showed the donor information and how to reach your top credit cap. These scholarship granting organizations have been doing this since 2011, and they're doing it really well. They're doing it to the tune of over $5 million a year in donations, because obviously they've been exceeding their cap. And so certainly we don't have to start from scratch and thinking about how we might market this opportunity and collect the information involved. So I would definitely encourage you to take a look at some of those samples. I'm going to be working on putting together some public school samples, making those available on our OSFN website. I'm hoping to make a landing page that contains lots of specific information about the tax credit law. That may be something that you can even link to your websites to provide more information to potential donors. Creation of that is underway. I'm still waiting to get more specific information from the tax commission before we build that out. So as I mentioned, ongoing updates. As I get information, I'm sure going to be sharing it with you all and making sure that it's available just as soon as possible. I'm hoping to create that website with information that school foundations can use to communicate with donors. We've also spoken with our executive director group about creation of some video collateral. On the previous page back here, This Oklahoma City Archdiocese video is a really, really slick piece of collateral that does an absolutely fantastic job of breaking down the tax credits on the private school side. I would encourage you to take a minute and watch it. I find it helpful in just understanding how this whole program works. We would like to do a version of that and make it available and generic enough that all public school foundations could take advantage of it and post it on their websites to educate their donors. But again, until we have kind of final information on some of the things, including that $200,000 cap and pour overs related to that, it's a little bit too early to launch into building that right this minute. And then sample documents, those will be coming soon too. So that's kind of my overview for you all. I am going to exit out of my full screen, and I'm going to give you a quick warning here because I would like to go ahead and make you all panelists for the remainder of this webinar so that we can talk to one another. So I'm going to stop my screen share and I'm going to promote you all to panelists. I hope that some of you are willing to join us with video and maybe to talk. It's okay if you'd rather keep your camera off. I didn't warn you ahead of time. But I think this might be more productive as a face-to-face discussion than it is in webinar form. So let me make sure that I'm getting you all on here. Hi, Mary. It looks like everybody's kind of transferring over. And if you all are willing to jump on camera, or if you want to ask a question, I would love to have you sort of join in our discussion. Mary.
You know, I'll always jump in. And first of all, thank you. Hi, everybody. Thank you so much, Katie. Oh my gosh, the work you've done on this is just phenomenal. And it becomes a little more clear every time I hear you talk about it. Though I will have to say it is not 100% clear yet. And really it's not. I've had a number of conversations with our district general counsel, and it's just a lot to get through, but I know that we will get there together. I have a couple of questions. You may or may not have the answer, but I'd love your perspective on this. One of your slides talked about an audited financial statements being due to the governor and the tax commission and all the entities by December 31st, 2022. So the timing on that didn't make sense to me because it's for donations in 2022. We're not going to have audited financial statements of those donations at the end of 2022. So does it mean 23, or does it just mean they want to know that we have an audit?
I think they want to know that you have an audit. I need to go back and look and see if I copied that language exactly correctly too, Mary, because you're right, that doesn't make sense because you wouldn't have completed a full year of even having all of those donations in place.
The year wouldn't be closed yet.
And so you're right. I'm not sure why that particular date is on there, and I'm looking at it, and it does say statement by December 31st, 2022. So I guess that would just indicate my understanding with all of it, Mary, and as we all know, a lot of this doesn't make a lot of sense. Unfortunately, I don't think there was a lot of input from public school people, and certainly no input from foundation people when they wrote this law the way that it's written. And there also was very little time between when it was considered and when it was passed for any appropriate edits to be made. But my understanding is it's one of those things. When we talked to the tax commission, they said, yeah, they told us you have to give us an audit, but it doesn't say what we have to do with it. And so I think it may be just an attempt by the legislature to ensure that they are, making sure that our organizations are above board. And so I think it's more of a ticking of a box check right now than a real tool that's going to be used in any way to evaluate your foundation or your programming.
Well, that is certainly something we need some clarity on, because December 31st, 2022, I would only be able to provide my 2021 audit.
Correct.
Won't include any kind of evaluation on programs that we had donations for this program for. So, okay.
Yes, it does not make a lot of sense.
No, doesn't make a lot of sense. And one more question and then I'll be quiet.
Yeah, no, you're fine.
The piece about identifying a program, I kind of like that idea to think if we narrow in on one program and go to our donors and say, support this program and get tax credits. Though the other side of me thinks I'd rather go to donors and say, support the foundation and all that we do and get these tax credits. So I'm wavering on it, but I think you also put on one of your slides that for these tax credits, the donation must be 90% to a program and 10% to overhead or operations. And I wanted to clarify that.
Yeah, so this is good question stuff too. Do you designate a program and run the funds directly to that program? That was one of the things we asked at the OSSBA conference, if that was possible, right? To start a special designated fund and only make donations to that fund tax credit opportunities for your donors. That would certainly be one way if you wanted to be able to specifically recruit people just to get a donation for a certain program. But the thing that Commissioner Jolly, who is no longer with the Tax Commission, brought up when he gave his presentation to OSSBA is that is not the language that's used in the bill that will become the law. The language states that really a donation to a qualified organization qualifies you for a tax credit. And his example that he used that was a little bit chilling to me was, let's say I get on my TurboTax for the year and it asks me, did I give a donation to my school foundation? If I can click yes to that, then it's going to say, oh, you're eligible for this tax credit. And so depending on how the tax commission runs this and figures this out, we may not have a lot of control over which donations are tax credited and which aren't. Which, as you might imagine, in some of your foundations that bring in quite a bit of money every year, you're going to hit that $200,000 cap, and all of those are going to be prorated. And you can't offer it as a protected opportunity.
Okay, I was going to be quiet, but can I say one more thing?
Yes, please.
Because it concerns me that the onus of all of this reporting is on the foundations.
Yes.
I know of another state, West Virginia, that I don't know if they still have this program, but I learned that their tax credit program for public schools put the onus on the donor. So like when you go to Goodwill and you give a big pile of clothes and they give you a receipt, they in West Virginia, if you gave to the public school district, the donor got a receipt that probably had all the disclaimer amount, like this could allow you to get a tax credit of 75%, but it could be prorated and blah, 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 all that stuff, and says, here, donor, you turn this in on your taxes. That way, we don't have to worry about Social Security numbers. We don't have to have the back and forth. Yeah, you may get it, you may not get it. I mean, how do we even control that? How do I control what I do for my donors versus what anyone else on this call?
I know. I think this is where some of this deep frustration comes in for all of us. On the private school side, I guess maybe it made sense when they started this way because these organizations were formed only to take these scholarship donations. And so their whole purpose was to run just this program. Well, we're all running foundations who have donors, longtime donors, and this has never been a thing. And so then to have to sort of switch gears and figure out how do you collect the correct information. I mean, you're going to have donors that are like, why are you asking for my Social Security number? Right. And so, how do you keep that information, keep it secure, communicate it appropriately? I mean, there's definitely a lot there that if this just has to be made available to all donors, that we're going to have a really hard time figuring this out. The one thing that I will say is that that also goes for the district, because the way that the language is written right now, donors to the district should also be given these tax credits. And I guarantee you, none of our districts are in a place where they're ready to try to manage a program like this. So the one thing that gives me peace about is that I know organizations like OSSBA are going to be very heavily involved in figuring out how all this works. And if there are things that are interpreted in such a way that they just don't make any sense, I do hold out hope that we may even see some legislative amendments to this going forwards that might help it to make more sense for us. I definitely think that may be something that we have to wade into, is trying to see if we can get changes made to the way it's written so that it makes sense. Because the way that it's written right now, we know we have some problems.
Go ahead,
Shay, you had your hand up.
I did, but so did Elizabeth. Go ahead. Go ahead, Elizabeth.
You can go.
You want me to go?
Oh, sorry.
No. Go, Elizabeth. Go, you go.
No. So Katie, what you just said, we use the language, Mary. I appreciate you providing that language, because that was approved by the Jinx School Board on Monday night as well. We just took your name out and put ours in, and that
Okay,
was.
I was going to ask you what you ended up using, Elizabeth. So, okay, good.
Yeah, we did that. And Dr. Butterfield and our CFO, I definitely feel like our organization, the foundation, is the right organization to, be designated to receive, donations for the tax credits. My question is, though, what you just said is, if that designation has been made, that the foundation is, the organization to receive donations for that tax credit, then is it open up to the entire donations to the district? Do the donations have to, if the school district designate the foundation, does that change that at all, do you think?
I think that's one of those things that we don't know the answer to yet, honestly. I think it's going to depend on how the tax commission chooses to interpret what's there and create the rules. So my answer is, based on what I heard from the OSSBA meeting, that is unclear at this point.
What do you think is the next steps for us to get them to, do we just sit and wait, or is there, is there anything we can do? Because, November 1 is, right around the corner, like you said, but starting in January 1st, how do we, I feel like we have to provide information to our donors, and
so that's what I was gonna kind of mention. So I was gonna show this. I received this in the mail, and it's basically for like Catholic schools. And it's talking about, it says support financially struggling students, which I guess that's their program,
Right.
to access Catholic education in Eastern Oklahoma. Donate today. And it basically talks about exactly what we've been talking about. Check mark, I will do a 1-year commitment at a 50% tax credit, or I will do a 2-year commitment at 75%. Then they've got some math equations here. But then the information that they are requiring in order to qualify for this goes to donor filing status, whether you're single, married, how you file. And then their information is, of course, name, address, phone number, but then you've got, they're asking for their social security number and bank information, and however, let's see, I'm trying to read this. And then they've got a little bit of information there. But this, I guess, is what they're sending out in order to collect donations per this act. Although I feel like they're way ahead of us because they already have this. And then along with it comes a brochure that explains pretty much exactly, Katie, what you pinpointed out there. And with pretty much the exact same math. I think it is. I think it's the exact same thing that you used. Mm-hmm. And so, this is what they're using in collecting this information. But like you said, they have one purpose, and they've only had one purpose, which is this. I mean, how many programs do we support?
I know.
It's like, pick one. I don't even know where to begin.
Yeah, I think this is where we have to remember that when the legislature did this, that we have to keep the focus on, they did a good thing by opening it up to us. That's positive. But the way that it's being managed on the private side is not going to be able to be the way that it's managed on the public side. And so there may have to be some changes made if that's the approach that the tax commission takes, going forward this year. And as far as, can we be proactive? I feel like I've been trying to be proactive. I was able to make contact with one person at the tax commission. I offered to that individual that I would love to have the opportunity to talk with them. If they have questions for school foundations going into this, that we would love to talk to them. Reached back out to that same person with an email a little bit ago in the run up to this meeting and did not get a response. And then again, as I mentioned, Commissioner Jolly, who helped present for the tax commission at the OSSBA meeting, has resigned his position there and is no longer there. And so just getting connected is proving to be really challenging right now. And I also know that the tax commission is overwhelmed because there were, I can't remember exactly how many laws they said that involved changes to different tax things in this past session. And all of those go into effect November 1, and all of those go into effect January 1. And so although this is like a panic button issue for us, it's just one of many for them. And so it's been proving very difficult to make the connections and to have the discussions about how we might be involved in sort of pushing this forwards. So we're sort of in this catch-22 place, you all, of trying to certainly consume the information as soon as we get it. I think all of us are going to have to make peace with the fact that this is going to not be polished and ready to go out the gate on January 1. But hopefully we'll at least have enough information by then to sort of be starting to make plans for how we can manage it year 1. And I've made the right recommendation to to some smaller foundations who've been really freaked out about this, that it's also okay not to be ready to go on January 1, but to see, to take some time and see how this is all developing as they get ready to dive in, because it's a lot. It's a lot for us who have some level of capacity in our foundations. It's even more for our all volunteer foundations who may or may not even have the things in place to be able to register successfully to give the tax credits. So
What I'm thinking is that I may just go to a couple of my large donors and talk to them about it rather than putting it out there for everybody until this year we get through the mess of whatever's going to happen with language changes. And I have one donor in particular who just finished a 5-year pledge, and I'm talking to them about what's next, and they'd beat the cap right off the bat with one donation, and then I just would have to worry about one donor instead of multiple donors. Does that seem crazy?
Do you get that choice?
At all. In fact, I think that is exactly what some of the proponents of the public side thought might happen. I think the tricky thing is we need the tax commission to tell us that we don't have to offer this to anyone who gives us money for any reason.
Yeah.
And that's what's still unclear. If we get the information that we don't have to offer this to every single donor, then I think your strategy, Mary, is the #1 strategy out the gate, which is approach a couple big businesses, offer this as an incentive to them, and run with the money. See how it goes the first year, and then determine whether or not you can expand it. Certainly within that is knowing with that district cap. I think the other critical question is with that district cap, I don't see the whole public school side in Oklahoma hitting 25 million, but some of our big districts can in a heartbeat. Some of you all could hit that in a heartbeat. So what we need to know is, will more of that money open up to the public side first before it pours to the private side? Or when you hit your 200,000, are you out of the game? Because if it's a situation where we have some flexibility in that 200,000, that makes me feel a lot better for you all too about continuing to solicit those donations, from a larger pool of people, because I do think $25 million is an awful lot of money. And that's an awful lot of room for our school foundations to operate, as long as we kind of get that public side to public side pour over before it starts pouring over to the private side.
So I have a couple questions. So it's 25 million every year, right?
Every year,
And
for
so
each side, total 50.
So if they exceed the cap and then it rolls over to the subsequent first, second, or third year for a donor, then that 25 million keeps getting smaller and smaller to make up for what they weren't able to accommodate in the first year, right? Is that correct?
Yeah, and now
then?
you see why there was a huge push from the scholarship granting organizations to raise the cap, right? Because
Mhm.
they are exceeding their cap and they're exceeding their cap every year, and their donors are not getting the full benefit of what they can promise, I'm sure, because of that.
And so also I was going to share with you too, I recently learned what one of my sorority sisters is a judge for the tax commission. And so I shared with her kind of what was going on, and she really wasn't aware of it, but let me know, she might be a good resource for us actually. And I'm
Definitely.
sure she would be helpful.
Yeah, I'd love to talk with you about maybe connecting with her. Really, any ends that you have with the tax commission. Certainly, I'm willing to reach out to more than just the gentleman who I connected with earlier this summer. And he was very kind and very helpful. I'm sure he's also very overwhelmed and very not ready to talk to me, which is why I haven't heard from him. So
Yeah.
that's not to say I won't eventually hear from him, and certainly will pass that on as I get that information.
When did Commissioner Jolly leave?
That was news to me. I had a call with Joe Sayano from LSSBA last week to check in with him about this as I was preparing, just to make sure that they hadn't gotten any new information. And he said that they had reached out, to kind of proactively try to have some conversation too, and had found that out that he's no longer in that position. And so I think that there's some turmoil there as far as leadership as well.
Mm.
So
I know our district leaders have met with actually the Senator Rader, who was one of the authors of the bill. And there's confusion there, to be honest. I mean, on how he's interpreting the law that he was an author of.
right. And I think that's where it just gets so interesting for all of us. It's just
Sure.
tough to know. I want to thank you all. We're coming up on 1 o'clock. I'm going to go ahead and end the webinar here in just a second. And thank you for coming. And if you all want to stay on and discuss for just a couple more minutes, I'm certainly available. But thank you for those of you that attended live. And if you're watching this recording, feel free to reach out to me with questions if you have them, and hope to see you at our next webinar. So thanks. I'm going to stop the recording.
Katie, bye-bye, everyone.